Breaking news out of Wall Street tonight: Tesla beats earnings, but the stock is tanking, and Elon Musk is at the center of the storm once again. That's right, folks. Even when Tesla delivers better than expected financial results, the market finds a reason to punish the stock, and this time, the culprit isn't competition from China, rising interest rates, or even a price war eating into margins. This time, the damage is coming directly from the mouth of the man who built the company, Elon Musk himself. Let's break this down fast because there is a lot to unpack here. Tesla came into this earnings report with significant pressure on its shoulders. Investors were anxious, analysts were cautious, and the electric vehicle market has been facing serious headwinds across the board. So when the numbers dropped and Tesla actually beat earnings expectations, you might have expected a rally, a surge, maybe even a celebratory moment for long-suffering Tesla shareholders. That did not happen. Instead, shares fell, and here's exactly why. During the earnings call, Elon Musk made comments that sent shockwaves through the Tesla investor community, particularly around the topic of full self-driving and Tesla's Hardware 3.0 platform. Musk confirmed what many skeptics had long suspected, that Hardware 3.0, the computer system currently installed in hundreds of thousands of Tesla vehicles on the road right now, does not have the capability to run the full, unsupervised version of Tesla's autonomous driving software. Let that sink in for a moment. Owners who purchased Tesla vehicles with the promise of full self-driving capability, some of whom paid upwards of $15,000 for that feature, are now hearing from the CEO himself that the hardware sitting in their cars may simply not be powerful enough to deliver on that promise. That is a massive statement. That is the kind of statement that triggers refund demands, class action lawsuits, and a complete erosion of consumer trust. And Wall Street heard every single word. Now, Tesla has previously offered Hardware 3.0 upgrades and has been rolling out Hardware 4.0 in newer vehicles. But the question that is now screaming through investor channels is this: what is the path forward for existing Hardware 3.0 customers? Are they going to be left behind? Will Tesla offer free hardware upgrades at scale? And crucially, what does this mean for the timeline of Tesla's robotaxi ambitions, which Musk has been dangling in front of investors for years as the company's golden ticket to explosive future revenue? The robotaxi dream is central to Tesla's valuation story. This is not just about selling cars anymore. Tesla's bull case rests heavily on the idea that its fleet of vehicles will one day generate autonomous ride-sharing revenue around the clock. If the hardware already deployed across a massive chunk of that fleet cannot support true autonomy, the timeline for that vision gets pushed back significantly, and markets do not like uncertainty around timelines, especially when stock valuations are priced for perfection. This is also happening against a backdrop of Musk's increasingly divided attention, with his role at the Department of Government Efficiency, his ownership of X, his SpaceX commitments, and his involvement in the AI space through XAI, all demanding enormous bandwidth from a CEO who is already stretched thinner than anyone in Silicon Valley history. Tesla stock has already been on a volatile ride this year, and today's drop is a stark reminder that beating earnings on paper means absolutely nothing if the CEO steps onto a conference call and plants seeds of doubt about the core technology promise at the heart of the entire business model. The numbers were good. The words were devastating. And tonight, Tesla investors are left asking the most uncomfortable question of all: when exactly does the future that Elon Musk keeps promising actually arrive?